Hey guys, welcome to our channel where we look to help you make financial decisions simple. Today we're going to take a look at 3 strategies to lessen the tax burden to heirs. Stick with us. Hey guys, so what are those 3 strategies to lessen the tax burden to heirs? Now, a question I often get is, I want to leave money to my kids or grandchildren someday, but I just don't really know how. And so the default to that is somewhat tongue-in-cheek response of, well, whatever Uncle Sam or the nursing home doesn't take, they can fight over the rest, right? I find this a sad default solution to many pre-retiree and retiree legacy plans. Earmarking the funds after careful planning for what's needed for retirement spending doesn't have to be an afterthought when you're passing it on to your kids. So today's scope is more of a focus on the question of how to limit a few of the eroding factors like Uncle Sam, who for many of our clients has become synonymous with the IRS. So number 1, buy some life insurance. It's kind of funny because life insurance has so many different tools, and I know we talk about it a lot on our channel, but it can be a great tool to avoid the tax drag on large IRAs and other taxes owed after the original owner dies and passes these assets on. With the new 10-year distribution rules in place for non-spouse, non-disabled inheritors, all this money, right, these IRAs especially, have to come out over 10 years. No more stretching it out through the lifetime and making, really little trickle out payments. So these distributions can get quite large and increase the marginal brackets of the people who are inheriting this money. And so we use insurance to protect against this erosion of taxes to these assets being inherited. So how do we do this? Like how do we actually use the life insurance? So this is a very simple method, is we take an irrevocable trust and we purchase a single or joint life insurance policy on the IRA owner, right? The parents, if you will. And then those owners gift the money to pay for the life insurance to the trust, and that buys up and funds the life insurance. Now, this is a simplistic method and has many different variations, but the use of these tax-free proceeds at the death of the owners, right, the IRA owners, then to pay the taxes to the beneficiaries can be quite liberating to free them from these big tax burdens. So that's number 1, buy some life insurance. Number 2 is consider lifetime Roth IRA conversions. Now, what is that? Well, a Roth IRA conversion takes money from a traditional IRA or other qualified account and converts it, whatever amount you want, really each year, to a traditional Roth IRA, which over time has traditionally been, and so far still is, treated as tax-free vehicle for retirement savings. And now many times retirees are in a lower tax bracket than their children who are maybe really in their accumulation years and making a lot more money. So since these retirees are in these lower brackets, they might have more room to do these conversions and pay the tax at a potentially lower tax rate, marginal income tax rate, than their children, should their children inherit and then be forced to pull everything out over a 10-year period. So we have to be careful here and make sure we also aren't exposed to too many other adverse surcharges or taxes because of higher incomes when we're older, such as Medicare surcharge or the net investment income tax. So careful planning on this particular strategy and the feasibility of whether this is going to work is warranted. So also make sure you've had the Roth IRA for more than 5 years so your beneficiaries aren't stuck with a partial tax bill. So that's number 2. consider lifetime Roth IRA conversions. And number 3 is simply being mindful of how you leave money or assets, including these IRAs, to heirs. So you may have multiple heirs, including maybe charities thrown in. We want to take account all the approximate tax filing statuses and these marginal brackets of our heirs, dividing everything equally, like a lot of people say, like, oh, we'll just give everything equal to the kids, or simply assigning a proportion of my estate to charity just because I want 10% to go to charity, isn't really careful planning. So rather than doing that and specifying percentages, maybe specify certain assets or certain percentages of assets that are, for example, of a charity, taxable if it was given to the kids, but to a charity who's potentially tax exempt, they can get all the benefit of the money, right? So for example, you might have one child in a higher tax bracket than another child. You could be leaving them, that higher tax bracket child, maybe less money because of the unequal tax erosion between them. Now, this isn't something that everybody really pays attention to. You could be, but if you don't, like, you could be really giving the IRS, who is a beneficiary nobody wants in their estate plan, you could be giving them unintentionally even more of an inheritance, even more money than by simply just giving each other the same amount, right? Each of these kids, 3 kids, 2 kids, whatever, giving them all the same amount of a percentage, than by specifying maybe the accounts that are more tax-free, right, like a Roth, like we just said in the prior example, to the one that's in a higher bracket, and the accounts that are maybe more taxable to the one that's in a lower bracket. So then when you kind of calculate things out, it's an even net tax inheritance. So there you have it, guys. 3 simple ways of limiting the tax to our heirs. And again, just to recap: 1, buy some life insurance, preferably not in your estate. Have a trust or something by it. 2, consider Roth IRA conversions. And 3, just be mindful of how you're gifting stuff at the end of the day, what your estate plan says. And if it's been a while since you've taken a look at that, maybe you want to bring that out of the archives and refresh that. So please share this with your friends and family. Smash some buttons below if you found this useful. And guys, until next time, keep doing life better.